Again, this is a short clip of what I taught in a really cool Etsy workshop that I did, and it's one of the very powerful concepts we're going to learn inside of the Solopreneur Bookkeeping workshop. So it's better banking. So what does it really mean to do better banking? So I love this quote by Warren Buffett, of course, our banking and our money master, right? Warren Buffett. And he says, you only have to do a very few things right in your life so long as you don't do too many things wrong. And I always kind of giggle when I read this because I'm like, oh, well then what are the things that I need to do right? Because I'm sure I'm going to do a whole lot of things wrong in my business, which is totally normal. But what are the key areas that I want to do right, right? Those few things that I really want to do right because I want to build a profitable, sustainable, growth-ready business that supports me in my dreams and goals. So what does that look like? And so I like to bring that into this concept of building a profitable business by developing your better banking habits, your better money habits in your business. Because, many times we may not even learn money habits or financial literacy habits personally. And then we decide to open our businesses and run our businesses. And we have to now learn money and banking habits for our business, which is they're different habits for our business. And so even though there is some crossover on overall good money habits, we want to focus on business banking habits and business money habits. So let's talk about that. And we always need to start with the first most important concept, which is what? We are separate from the business. And in our boot camp, in our workshop on November 7th, we are going to start right there. You're coming into this workshop to build a business, to own your finances, to take full control of your bookkeeping and have bookkeeping done year round in a faster, seamless, and smarter way by leveraging technology. All of that because you need to really own your bookkeeping, which is separate from your personal finances. So you are separate from the business. Now, yes, you are a huge part of the business. You are the visionary of the business. You are the one that founded the business, that owns the business possibly, and that runs the business, but you are completely separate from your business. And based on your entity type, we'll talk a little bit about entity types in our workshop. You may be a sole proprietor, which means you're the owner of the business. You may be a partnership, which means you're a partner in the business. You may be a limited liability company, also known as an LLC, which means you are a member or a managing member in the business. And if it's a corporation for profit, you may be a shareholder of the business and an employee of the business. And if it's for nonprofit, you may be a stakeholder of the business. And the reason why we need to start understanding that language and getting comfortable with that language is because you are a separate entity in the business. You and the business are not the same. That's money banking habit number one, the most important one. And many times it's the hardest one to break because we need to separate ourselves from our business. We need to really understand that we are a separate part of the business, even though we know it's our heart, our tears, our sweat that has built this business. But when it comes to bookkeeping and finances, because this is the bookkeeping solopreneur workshop that we're talking about, and we're going to focus on better bookkeeping and stronger bookkeeping so you can reach tax ready books year round, so you could have the bookkeeping and finances insights that you want. And to be able to reach that goal when it comes to your business finances, we need to own this truth. You are separate from the business. So again, I'll be covering some topics even before our workshop, so you could already start thinking about this and possibly even have questions about it as well. Okay, so now we know we are separate from the business, right? Let's just assume everybody watching this, they know they're separate from the business, which means let's own that truth now and let's cut out all that personal commingling in our business. Let's stop mixing personal and business in our business as best as we can. And let's clear out those old habits and bring in new, good, better business habits. And the best way to do that, of course, the starting point when you're creating these better banking habits related to your business is to open a separate business account. Open a separate business account in a bank that you trust. We'll talk a little bit later about the banks that you can think about or the banking options you can think about. But right now, the main thing is you are separate from the business. You have a separate business account And you may have multiple business accounts as well. Remember, you may have business accounts that are all related to that business, but for different reasons, for different business reasons. We'll also be talking about that in the workshop on, how you allocate the money in your business. How do you allocate the income? How do you save for taxes? How do you pay yourself from your business? We'll be covering all of that, my friends. And it all has to do with banking. That's why we start with the first B, which is banking. It's where all the money's at. Okay. And so, again, huge, important new habit that we always want to create is not only to separate our business transactions in a separate business account, but we may have multiple business accounts. Now, again, the idea here is building better habits by starting with the basics. So many times you may have started your business a few years ago, or maybe you started this year, or maybe you're thinking about starting it, which is amazing because you proactively want to do things the right way. Wherever you're at in the business, you need to go back to the basics, everyone. Go back to the basics. There's no shame in your game if you want to start with the basics. It's the smartest way for you to embrace financial literacy and for you to learn these great money habits. So what do I mean by that? We're going to start with the fundamental source document where all money in and money out comes from. Where is that? The bank statement, right? Let's start with the bank statement. Then let's use credit card statements. Let's use all of those source documents. We'll also talk about source documents in our workshop, but let's talk about why those source documents have so much important information and data that you got to start there first. Start with those documents first before you get all, shiny object and get excited about, oh, there's all this online banking and there's this app and there's this software. That's great, but that's not where you start when you're trying to learn better banking habits for your business. You start with the fundamental source document, which is your bank statement and your credit card statements. So let's talk a little bit about that. So let's talk about what it means to start with your bank statement. So this is the beauty of really owning these kind of bookkeeping these fundamentals and really wanting to learn these bookkeeping best practices. It's actually not hard at all. All you need to do when it comes to looking at that bank statement, for example, is you need to just get familiar with what's coming into your bank and what's going out of your bank. We call that money in and money out. And so we're using an example here. Let's say we're looking at a bank statement, and on the left-hand side, most bank statements have the money in, the money out column in two separate columns. Sometimes they're in the same column, which is a little bit more confusing. But in this example, it's in one column. It says deposits and additions, and we know that that's money coming in, right? We know that's money coming in. Here is the misconception about money coming in, that all money coming in is revenue related. All money coming in is payments from your customers, is income generating revenue coming in. So, or deposits related to your revenue. That is not true, everyone. Yes, we want a lot of that money coming in being related to revenue. We want a lot of that money coming in related to customers. And again, depending on how your customers pay you, it could be real-time cash flow coming in, or it could be a payment to an invoice. So you also have to understand how that money in is coming in from your customers. Again, a deeper dive on that in the workshop. But we need to focus on the fact that the first top level thinking is, okay, yes, there is money coming in that's related to our income activities, to our sales, to our revenues. Absolutely, yes. But guess what, my friends? Not all money in is related to customers. Not all money in is related to that income generating activities. There's other money in transactions that are coming in. How about when you contribute to the business? How about when you inject capital into the business through a credit line or a bank loan or other capital infusions, outside funding? How about when you maybe get a line of credit or cash advances, or maybe you got some support from your state or your localities, federal grants? So that is not revenue generating. That's not income. That is additional money in that you have to categorize correctly. So what's really important is, are you understanding the money coming in, and are you categorizing that correctly? Because the categorization is the bookkeeping part of it. The categorization is the bookkeeping part of it. Now, the power is that there are, of course, automated softwares that can help you with this. But if you don't know what this is, if you don't know how to categorize it, then the tool doesn't make any sense to you. The tool's not going to help you if you don't understand the fundamentals of money in coming in. Now, Now what we want to do is we want to talk about money out. So again, let's go back to that bank statement again, and we have money out coming in on the next column. And of course, the way we can think about this is we have, different transactions coming out of our business. And then the first thing we think is, well, I know what that is. Those are business expenses. Those are costs related to my business. Those are costs related to all of the sales that I did this month or last month or throughout the year. And of course, you hope that they're all deductible expenses too. So if you're doing your tax planning and tax strategies, you're hoping that you can deduct most of those costs. Okay, valid, very valid that that's what some money out is, but not all money out are expenses and costs. They are not. So again, let's have a reality check here. What else could be an expense? What else can be a money out that's not an expense? How about when you withdraw money out of the bank? That is not an expense. As a business owner, let's say we're building a sole proprietorship or solopreneur, when you pull money out, yes, you're paying yourself, but that is not an expense. That's not going to go on the profit and loss. That's actually going to go on the balance sheet as an owner's draw. So again, going really deep into what each one of those are. What about a bank loan and now paying the principal back? No, you could not expense principal payments. You could only expense interest payments. So that is what's called an allocated and a split transaction. Now we're getting a little tricky here, right? So you went ahead and paid $1,000 back to the bank, but not only, but 800 of it is paid to the principal. So that's going to hit the balance sheet, and 200 of it is interest that will hit the profit and loss as long as that loan is business related. So now you have to understand that even though it was a $1,000 money out transaction, you actually have to categorize it and split it and allocate it separately, right? Those are the kinds of things you learn when you think about banking and how it relates to bookkeeping. And that's the stuff we're going to go really deep on, because that's where many business owners struggle. Well, how am I supposed to know that when $1,000 payment gets written, that it's got to go into two different places? It's going to show up in two different financial statements. It's going to be reported differently. How do you know that? Well, you have to learn it. Right? You have to learn it by going to a bookkeeping workshop like the one on November 7th, or by going on your own and doing this learning and this financial literacy all on your own. It's very important, and you really don't find it anywhere. You won't learn this in school, everyone. This is where you have to go ahead and decide to empower yourself as a business owner. And here are just a few other examples of money out that, of course, we'll be covering later. And what I always like to say as well is have fun. So you're like, really, Mariette? Have fun? Yes. So if you're going to go ahead and pull out that bank statement, or if you're going to do this exercise, then you're going to want to start saying, okay, well, I mean, I need to do this. So, and I need to understand that in the money in column, I'm going to see some income, but I'm also going to see other money in, right? Let's give you the example of a grant or a loan or your own capital contribution. So if you know you're going to see different types of transactions in the money in column, pull out your highlighters, pull out your markers, and start coloring those different ones. Same thing on the money out, right? On the money out, if you know you're going to have costs, but you're also going to have other money out, like when you pay yourself and pull money out of the business, and when you do other transactions that pull money out, and you want to highlight the ones that you're like, ooh, that's a tricky transaction. I'm not sure how I'm going to categorize that. I'm not completely sure on how that's supposed to look like in my books. Don't worry, everyone. If you're not sure how it's supposed to look like in your books, highlight it in yellow and make a little note that says, ask my accountant, ask my bookkeeper, learn this, right? Because that's your way of saying, hey, I need to be more mindful. I have to be smarter with my banking and my bookkeeping. So I'm going to learn this, and then I'm going to come back and know how to categorize it. And that's the beauty. Once you've learned it, you can't unlearn it. Once you learn it, you know what to do. It's very, very exciting. Okay, everyone. So let me just end with one other topic when it comes to the better banking and really thinking about that money in and money out that's coming out of your bank. So now you understand the importance of money in being transactions coming in, but it could be different types of categorizations, money out going out of your business, and also it can mean different types of categorizations. But who is the money in and the money out coming from? So we kind of covered the what it is, right? What kind of transaction it is, but it's also just as important to understand who it's coming from. Okay. Because in a business, you have different who's. I always like to say we start with the first who, which is the most important who, which is you. You're the most important who in the business, but there's other who's that are bringing money in or that you're paying out of the business. And so we have to understand who those who's are. So you, the business owner, so you can be contributing to the business and money in example, pulling money out of the business, money out example. You also have customers. So customers, obviously, we want them to put money into our business. So those are our money into our business. But also, they may be pulling money out of our business because what if you go ahead and you have a customer and you sold something to them and then they decide they don't want it anymore? It's a return, it's a refund. Well, guess what, my friends? We need to pay it back to the customer. So then we have to make sure that if they went ahead and sent us $100 for a product that they bought, and they're like, I don't want that anymore. And so now we have to send the $100 back to that customer. That could be a money in or a money out transaction. Of course, we always think money in, but let's not forget about the money out. Another good example of that are vendors. So we always think of vendors as money out, right? Very normal. We go ahead and we buy supplies, materials, we do purchases. It's a money out transaction. Yes. But what if we buy something and we don't like it? We don't want it anymore. It wasn't a good fit. We can go back and get a refund and that money comes back in. Is that income? No, it's not income. It's just a refund of our original purchase, right? So we need to make sure we're categorizing that correctly. And then lastly, when we start building a business, when we're growth ready, we have a team. We use outside services. We use professional services. We use other humans to help us build and grow our business. And so that is a lot of money in and money out going there, right? They may be paying us, affiliate fees, compensations, collaboration. We may be paying them commissions or different type of fees, referral fees, whatever it is. We may be hiring in employees. Now those are payroll employees. We may be using outside services. So that's 1099 contractors, a whole lot there, right? My friends, it's a whole lot there. And obviously that alone is a conversation we need to have and that we'll be having, of course, in our bookkeeping workshop. And then lastly, let's wrap this all up, right? Let's wrap this all up when it comes to better bookkeeping, smarter bookkeeping, bookkeeping that anyone can learn. That's the power of it. Anyone can learn this. And I mean that. I know some people say anyone could do bookkeeping. Anyone that's willing to learn can do bookkeeping. Absolutely. Yeah. And I'm a 20 plus year accountant. I'm not scared that you're going to take my job when I say anyone could do bookkeeping, but anyone that's willing to learn what I'm teaching can do bookkeeping. So let's make that very clear. So now let's think about your business on the go. You want it to be secure, but you also want it to take care of you. So things you can think about is, does the bank account you're going to choose, does it have fees? Does it have minimum fees? Can you open multiple bank accounts? Does it have really good technical support? Does it have perks for your business? Does it sync with apps? Can you earn interest on your accounts? There's some bank accounts that actually will reimburse you for ATM fees, which is pretty cool. And then there's also opportunities for that same business bank account to provide you additional money in capital injections, loans, and lines of credit. So a lot of things, great things to think about when you are now ready to figure out what is your best option for banking. And that's it, my friends. That's a behind the scenes of just one of the topics we're going to be covering in our workshop on November 7th, the better banking concept, how you go deep into better banking. It's not just about choosing the bank account. It's not just about looking at your bank statement. It's about going deep into all of those transactions. What is all that coming in? How do I categorize it? Why do I categorize it like that? Do I categorize it in multiple places? And of course, as you're learning this, you are doing better bookkeeping. You are going beyond bookkeeping, which is going to be the next topic we'll be talking about soon, is going beyond bookkeeping, meaning that you want to think bigger. You want to leverage technology. We want to make this a seamless automated process that doesn't feel heavy all the time. And the way you make bookkeeping a less heavier, a less mundane task that we all have to do, by the way, right? Bookkeeping and our taxes in our business is that we leverage technology. We bring in those automations. We create amazing systems, right? We create amazing systems by going beyond bookkeeping, by thinking about those bookkeeping automated systems. And ultimately, our goal, of course, is to go into more advanced areas of business like budgeting in your business, like looking at your financial statements in your business, and most importantly, being tax ready and finance ready, meaning your financial statements are ready and beautiful all year round. That is always our goal, but we have to get there. It's a journey to get there, and that's what we want to do in our upcoming bootcamp with all of you. So again, I'm so excited. I wanted to share some behind the scenes. I hope you liked it. I'm going to keep these videos a little short so you guys can watch them. You can share them as well, because regardless of whether you join our bootcamp, I'm going to give you some really fun, rich content that should help you to start thinking about what it's like to own your bookkeeping, to take control of your finances, and finally be that tax ready and finance ready business owner that can make everyday confident decisions every day. And you do that by taking ownership of your bookkeeping and finances year round. Okay, everyone, I hope you enjoyed this, and we'll see you in the next sneak peek. Bye.